you are. Okay, go ahead.
Thank you. Sorry about the people at Zoom. And so oil, there's the nether, it's up the biggest. It's at 23.5%. This obviously has to go on with what's going on with Russia, as well as many of the other energy producers. I like this graph because it tells more of a story. And so here's our price change for the last 12 months. Our biggest, again, is the Nike and the emerging markets. Oil is up very high at 65.6%, as well as Ethereum. The Ethereum at 44.8%, I would say is mostly due to the utility with NFTs on OpenSea and all the burn rates, especially when you got to initialize your wallet the first time. So that's probably powered them pretty a lot, as well as everyone was waiting to move to Ether 2.0, which was delayed. So here's our sectors. And so we have the biggest sectors is tech decrease. They're down at 5.1%, as well as consumer discretionary is at 5.9%. The only one that's even doing a slight bump is consumer staples. This may be a hint later on that there might be a crack in glamour stocks. Here's our price change year to date. Energy, 19.9%. There's several big US energy producers that have vested interest in what's going on with Russia, as well as what's happening over in Europe. Again, we could see here from the chart, consumer discretionary is down, communication services, as well as real estate. Here's our price change for the last 12 months. Energy at 41.9%, as well as the same from the last chart. You got financials, consumer staples, and real estate. Communication services is at a negative 3.5. Here's a crypto heat map. We could see from the map last week, I want to say it was pretty much all green, unless I'm thinking of the next one. You can see here, there's a couple winners. Maybe it's due to them switching more to the Solana network, as well as Mana. Here's our sector heat map. And so last week, you seen it was pretty much all green. If you kind of take a real close squint, you could see some of the companies and firms that did well. You have McDonald's. It's really hard to make out. I think that's NBC right there. Here's our most anticipated earnings this week. Does anybody out here see a company they're excited for? There's got to be one person. All right, there we go. I want to see what Six Flags is doing. Also Lowe's, I'm curious to see what they're doing. Always Home Depot. Etsy, all right. Coinbase too, right? Moderna, there. Okay. Carvana, wow. And so here's our earnings reported. And we see that Virgin Galactic, they beat on EPS, missed on rev. We got Teladoc Health. I think in the future, that's going to be really big. I know I had a Teladoc appointment today, and I was really happy about not having to drive. And so they beat on EPS at 0.07. They beat on rev. We got Mercado Libre. They missed on missed on EPS, beat on rev. Then as always, I like the ticker right there for Diamondback Energy, FANG. That's a company I really like. I don't know if you've ever been in the store, but they definitely disrupted the energy drink market, right? They came in with 99-cent energy drinks. You could get 2 for a price, and they're actually okay for the most part. Here's some of the big hitters next week. You're going to have Berkshire B as well as Berkshire A. Those are 2 different tickers. They'll be reporting. We got the Beefly Network as well as a DQ Energy Company. It seems they have really high expectations from the analysts. So now we'll move on to the news. And so the current geopolitical pressure, based upon what analysts have seen, they say it's about to enter a stock market, or excuse me, a correction, which is actually more than 10%, but not, I believe, more than, 20%. And so the last time this happened was, I believe, in 2020 at the start of COVID. And we can see right here, besides that 0.4% correction, the market generally bounces back pretty well. So here's another breakdown. I like this one because you can see all the major, I guess you could call them anomalies or huge financial events. And so you can see, obviously, they're going to have very bad decreases on those years. But following has an excellent recovery, especially if you look on the far right at the 1 year column. And so this kind of just goes along with everything that's happening. Despite all this, you can see it's down 464 points. And so based upon everything that's happening, we'll find out on the next episode if the totality of the circumstances always. And so here it is again, the Russia-Ukraine, it's just everywhere, it keeps developing. The big thing here is the sanctions that the US government is going to bring down, as well as I know Germany's already starting to drop some. And so these sanctions definitely affect US companies, as well as others that hope to move into those markets. And so the next big thing is the rate hikes. Does anybody have a guess at how many points they think they're going to, how far they're going to move this month? You think 50 or 6? Okay. Okay. Yeah, I hope they just do 25, right? And so we'll see what happens on this. It'll be really soon. Hopefully they don't come out the gate too strong, but it might really be needed. And so here's a little coin news. If you're invested in crypto, China came out with a big announcement, of course, with the Olympics, worst Olympics turnout, but I believe they're pushing everybody to use their virtual currency while you're at the event. And also they banned, I believe, 5 tokens that were exclusively linked to Chinese firms. They were delisted from multiple exchanges. And so that's a pretty big wipe off. The upside here is it immediately. But it's pretty much recovered for the most part. And so here's the book I've been going on every week. It's much easier if you just get it on Audible, $16 a month. I think they give you 2 or 3 credits. You can get some really expensive books with them. But in this chapter, and excuse me from the last presentation, if some of the chapters were off, depending on whether you're listening to it or which version you're reading it could be off one chapter. This is actually chapter 3. And so they go from about 1600s of events that have occurred throughout history, such as the tulip bulb craze, or what they call the South Sea bubble, to where the South Sea Company was, they raised a huge amount of capital from investors, and it's basically the classic saying of another fool and his money was parted. And so, moral of the story, resist being swept up in allure and temptations, especially when you're not the most knowledgeable on the situation. And some of these examples could be people getting in late on the GameStop, or some of these Doge coins, or maybe like Avalanche, another rug pool token. And so this coming Thursday, I'm going to be teaching a class on capital IQ. It should be really good. We're going to be covering some of the stuff that they do on the Corporate Finance Institute. And so you can always get to this through the database from your library access. And so me and a bunch of students will probably be heading down there to the FSC as soon as we get out of class. So please come check us out on Thursday. And then if you want to follow me or just connect or talk about finance or books, you can follow me there. And I hope to definitely have the Market Watch competition up next week. We got any questions from anybody? comments, concerns? Thank you. Have a good night.
All right, great job, Anthony. So today we will be going over just a look back at February, some of the things we touched on with job reports, stuff like that, major economic things going on in the United States. And in that, we'll take a look at the housing market a little bit, how people have responded to inflation and things like that. And I know last week I said I wasn't going to talk about Russia unless they actually invaded. They made that difficult. Did they invade? We'll get into that later. And then I'm going to recommend a documentary. Big fan of this one. And lastly, I'll be having a special announcement for something we're doing in the Investment Society for all the members. So firstly, the IHS market, they put out their PMI output prices. This is mostly business output, stuff like that. And we can see that it's rose to a 2-month high in February. If you want to look at the chart, you can see a rating above 50 indicates growth and a rating below 50 signals contraction. As we can see here, it's obviously very high as compared to, goes back to January 2017, which is, it's good. It forecasts the future of how they believe businesses will do. So another statistics, the same people that measured that one, they measured consumer confidence, and it fell from 111.1 in January to 110.5 in February. This comes as mostly consumers are afraid of inflation. You can see they did a survey and it said that the consumers planning to buy homes, automobiles, and major appliances, their confidence in their plans to purchase that over the next 6 months, it fell pretty big. And then that goes into the housing market. The National Association of Realtors, they reported that the U.S. home sales rose 6.7% in January. So this is mainly because mortgage rates have been increasing. They found that it's been forcing home buyers to close on homes much earlier than they're wanting to. And the U.S. is facing a shortage of homes compared to the demand that they're facing right now. Many experts, they believe that it'll take years before the demand finally balances itself out. Housing market, it's been going a little crazy. And I mentioned in my first presentation that that's largely due to inflation. They're struggling to build new homes. I believe pretty much everything you need to build a home, lumber, concrete, labor itself, everything's much more expensive than it has been in the past. So used homes have, people have gone to buying used homes. And of course, that's increased the demand a lot. So there's some interesting statistics for people buying used homes. Recently, they've seen people coming in with mostly all cash offers. This is bad because it limits first-time home buyers to enter the market. So most of these people that are buying homes in cash, most likely it's not their first home. They're buying them as investment properties. So we're not seeing too many people being able to buy a home for the first time. I think the stat on that, it fell to 27%, which is down from 33% in the year before. And then at the end of January, there were 860,000 homes for sale, my apologies, down 2.3% from December and 16.5% from January 2021. Pretty big decrease there. And 20% of the homes that were purchased in cash. That's up 19% since last January. So we're going to be looking at the sanctions that were imposed on Russia. Anthony briefly mentioned this. The U.S. has imposed sanctions. They blacklisted 2 of the major Russian banks, and they banned any new sovereign debt accumulation. After I wrote this, I believe that they stated that they're going to place a sanction on the Nord Stream 2 pipeline. I included that earlier, but that's mostly from Germany shutting it down. The U.S. has said a lot of stuff about that pipeline without really having any control over it. But President Biden decided to put a sanction on that. So foreign sanctions, this came from mostly Boris Johnson, who stated he was pretty aggressive on his bans and stated that this is mostly the first wave of all these bans coming. A lot of them are travel bans and sanctions on specific individuals. There are 22 specific individuals, mostly Russian oligarchs, that were in Putin's individual circle. Like they froze any European or American assets that they had, weren't allowed to be traded. However they controlled that, they managed to put a sanction on it. So yeah, these are the first sanctions. President Biden, he came out very passive compared to what investors predicted that they were going, predicted his response. They thought he was going to be much more aggressive because he did technically break into Ukraine. He went into the breakaway regions, which I'll get into in just a little bit. But they thought that President Biden would launch more troops out and make more war efforts than he did. They said that the sanctions were pretty much a very passive and a very minimal response. So we're going to look at these breakaway regions because when I first heard it, I didn't really know the history behind it. So forgive my pronunciation. These are kind of crazy names, but Donbas, they're the collective region of Donetsk and Luhansk. Probably laughing at me. I have no clue how to pronounce these, but they broke away from Ukraine's control in 2014. And ever since then, they've been independent people's republics, as they've called themselves. They've kind of just remained people's republics since then and haven't been recognized by Russia until just recently. I believe in the past week, Vladimir Putin stated he officially recognizes them as independent separatists, and he used that to invade into them, pretty much calling them Russian territories, and he's using that to get closer to the main part of Ukraine. So the consequences of this, pretty drastic. We saw the first round of sanctions that are being placed right now, and the S&P 500 responded by falling more than 10% in January's high. That's the lowest level in 4 months. And as the threat of war is becoming more and more serious, people are seeing this as no longer like what they originally thought is his opportunity to negotiate with NATO. They're actually seeing this as a war threat. And this, along with like the other macro issues we're facing in the United States, inflation, the supply chain issues that have been ongoing for a long time, and stuff like that, are reasons for this giant fall. And then I'm going to get into the Nord Stream 2 production halted. That's mostly a response from Germany. So as we can see, the pipeline, it was completed in September, but it's not yet up and running because it has to receive approval from German regulators. And an interesting statistic about this is 40% of Europe's natural gas comes directly from Russia. So Russia is a major energy provider, and this pipeline would be very beneficial for their market-based economy. The decision to suspend the Nord Stream 2, investors reacted to this very harshly. Energy prices went up a little bit, as you can see on this graph. It measures Brent crude oil, and that dictates the value of roughly 2/3 of the world's crude oil production. So here's my documentary recommendation. I believe I actually got this from Eduardo last semester, and I decided to watch it just because it was it's an episode documentary format. It wasn't like an hour movie. Really easy to follow. There's 2 seasons right now. I'm recommending it after only watching 1 season. I'm about halfway through the second right now, but it's incredible. It goes into like corporate greed, things like that. Here's the description directly from Netflix. From crippling payday loans to cars that cheat emission tests, this investigative series exposes brazen acts of corporate greed and corruption. It goes into Wells Fargo in particular, and I'm not going to spoil anything, but overall it was a great watch. Doesn't watch as a documentary. I know some people don't like watching documentaries because they may seem boring, but this one had me hooked the whole time. I would totally recommend it. So my special announcement is that the Investment Society, right now we're in the rough stages of launching an alumni database. This came after Ramsey visited us last week. He gave us the idea. So right now we're in the process of gathering names, emails, companies of people. And this will be a resource for people that all the investment society members to just have networks and things like that. And I'll keep you guys posted throughout the semester. And here's my contact information. If you have any questions, if you'd like to see a documentary recommendation or something like that, just go ahead and send it to me. I'll answer any questions, or if you just like to connect on LinkedIn, here's that information. And here's Juan Carlos with mergers and acquisitions.
Hello, what's up, everybody? Okay, today we're going to talk about Pfizer. Again, a little background on Pfizer. Everybody knows Pfizer, but they're an American multinational pharmaceutical company, and they make, manufacture, develop, and sell drugs in these different areas of medicine, immunology, oncology, cardiology, endocrinology, and neurology. And if you're interested, they're like those are the areas in which those areas of medicine are specific in. Okay, first we're going to start with Pfizer's biggest selling drugs, and then we're going to talk about their purchase of Arena Pharmaceuticals. So there was a study done about the 50 biggest drugs sold in the world, and Pfizer had 4 of its drugs in that list. The first one is Apixaban, which is ranked number 3. They sold 14.3 billion in just 1 year globally, and it treats and prevents blood clots, helps and strokes. Ranked number 12, Prevnar, which is a vaccine for pneumonia, 5.8 billion. Palbociclib, again, some of these medicines I can't pronounce correctly, but they're there if you want to read them. 5.4 billion and treats breast cancer. And then Xtandi, ranked 12, 4.4 billion, and it treats prostate cancer. Okay, a little bit of intermission. First, I'm going to give you some context on the, so you can answer this question. Pfizer, how much did Pfizer make in 2021 from the vaccine revenue? And as more context, if you didn't know already, Pfizer's COVID-19 vaccine was in partnership with this German company called BioNTech. And BioNTech's Q3 financial statement, they forecasted that from the vaccine, they would make 22 billion just in 2021. And Pfizer's 2020 revenue was 41 billion. So does anyone have any idea or guess of how much they made from the vaccine in 2021? 150? No.
30 billion.
30 billion, close. They made 36 billion in 2021 from the COVID vaccine. And the CEO said that they expect in 2022 to make about 26 billion from the vaccine, and then about 15 billion from their pill that helps prevent COVID. And now another question, how much revenue do you think Pfizer made in 2021 in general? Guesses, assuming they made 36 billion. How much?
200 and everything?
Yeah, everything.
200?
No. Total revenue for 2021, 81.3 billion, which is 95% more than the previous year. And the CEO got paid, actually he got paid the same. So in 2020, he got paid 19 billion, and on 2020, he got paid 20, so 1 more million. No, million, I'm sorry. Million, yeah. Okay, now, why would Pfizer buy Arena Pharmaceuticals? The first thing is, I read an article that said that Pfizer had so much money that, not more much money than they normally have, so they had to spend the money somehow. So they recently bought not Arena, but they bought another firm like 2-3 months ago that treats various cancers, and that company, so drugs for cancers are also in the top 15 most selling drugs. Okay, first, Arena specializes in developing immunoinflammatory treatments. This is important for why they bought Arena. So, and one of the Arena specializes in 3 different areas: gastroenterology, cardiology, and another area. And gastroenterology is basically the study of the digestive system. And this is a quote from Mike Gladstone, global president of Pfizer's inflammation immunology. So he says, utilizing Pfizer's leading research and global development capabilities, we plan to accelerate the clinical development of etrasimod for patients with immunoinflammatory disease. So there's 2 reasons why they bought Arena. This is basically like the medical answer, like the good answer, and then there's the money answer, right? So etrasimod is important, just for the next information. So according to Pfizer, etrasimod is being tested in a late-stage study in ulcerative colitis, an inflammatory bowel disease that causes ulcers in the digestive tract. And what that means is inflammation in the digestive tract, mainly in the large intestine and colon, and 3 million adults in the US suffer from this. I'm sorry? Yeah, and why is this important? Now, this is important for the next thing. Okay, this is another drug, adalimumab. It's a drug that mainly treats inflammatory bowel disease and other stuff. And this drug, anyone has any guess how they rank in the 50 most selling drugs?
Probably like number one.
Yes, they ranked number one 2 years in a row for highest by revenue. In 2019, they sold 19.6 billion, and in 2020, 19.8 billion. And for second place on both those years, Keytruda, I don't know what they do, but it's like there's a big margin between those two drugs. So maybe that's another reason why Pfizer wants to get into the inflammatory bowel disease game. Okay, now, price and Arena stock chart. Pfizer is paying 6.7 billion or $100 per share. And this is Arena's stock chart. Okay, first, this is February 24th. That's basically 6 months before, no, more, a year before. Yeah, a year before they bought, Pfizer bought them out. They were $80 a share. And another thing about pharmaceutical companies is if they don't come out with news regarding like they are making more drugs or their FDA is approving their drugs, they just start dipping and dipping. Okay, December 10th, this is a day before they announced the acquisition. It was $49 a share and 3 billion in market cap. And the day they announced Pfizer was going to buy them out, it increased to $90 and 5.5 billion in market cap. Another interesting thing about this acquisition, like I mentioned in Microsoft acquiring Activision and the Cisco, normally they pay a market premium on buying a company, and it's normally 30 to 40%, but it's also based on their negotiations. And in this case, they almost paid 100% more than what the company was valued at. Now, how did the Pfizer stock react? Okay, so on December 10, again, the day before they announced it, Pfizer was worth $52.78. After they announced it, that day they announced it was December 13. It went to $55.20. But I also wanted to add the last day of the week was December 16, and it ended up being 16% up on the week based on the day acquiring Arena. And now to present, Pfizer is down 23%, but I think that's more has to do with how the whole market is doing in general. And that's it. Any questions? And also, if you guys have any questions regarding internship interviews or finance, you can go ahead and ask me at the end of the meeting. And now with the sweet spot, Mr. Sweet.
So we started our teams this week. We have some really good teachers. You got to join those sectors. You really do. If you're not in a sector, join one. Gabby's doing healthcare on Monday. She needs some students. Jacob did a great job. Is Jacob in here? I don't see him. Jacob has materials. We were talking today during his presentation. We found some companies on the list and we started looking into them. Boy, they were interesting. You're talking about, you get into an interview and one of the questions they like to ask is, give me a stock idea. And most students is like, Alphabet, Amazon, Apple, the obvious ones. You give some industrial or some material company or some healthcare company no one's ever heard of, and you can put a story behind it, boy, they're really impressed. So, take advantage of these opportunities just to sit there and look at a stock, you get to get into it. And that question comes up. You may not think it's the greatest stock in the world, but on the interview, you make it sound like it is. And they're just really impressed that you're excited about a company no one's ever heard of. Everybody does the companies everybody's heard of. That's every undergraduate student knows to do that. But if you do one never heard of before, boy, they're really impressed. So I encourage you, jump into these groups. The classes have been going well. Everybody's really well organized. We just got so many teachers. We need students to come and help them out. So just pick one and go with it, man. It's part of your networking. Get to know who these people are, support them, support your peers. And then when you're teacher next year, you have people coming and supporting you. So I'm really impressed with our teachers. All right, so talking about interviews. All right, so you're going into an interview, what would you want to know, relative to the market? Are things unusual? Are they normal? You want to know those kind of things. So let's start with interest rates. The one-year treasury has averaged 4.93% over the last several decades. Any of y'all buying 4.93% one-year treasuries today? What is the one-year treasury today? Well, it's up above 1%, so that's pretty amazing because it was essentially zero there for a while. The 10-year treasury has averaged 5.94%. It's somewhat skewed by the 70s because you had those 18% in there. But where are we today? Well, we're hovering around 2%. But the Fed's obviously going to raise rates. Why isn't the 10-year going up more? So the 10-year is kind of saying, yeah, they're going to raise rates, but they may overshoot it. We're going to have a recession. It's kind of that tug of war between them overdoing it. But then what's even more important is the yield curve. How steep is it? So the average difference between the 10 and the 1 is very conveniently 1%. So that's easy to remember. All right, so the 10-year is usually 1% higher rate than the 1 year. Where are we today? We're at 92, so we're pretty normal right now. All right, I've seen articles about, oh, everything's inverting. I don't know what they're saying is inverting. It's not the yield curve. So the yield curve is not inverted. It's not even close. It's pretty normal right now. So we don't have an inverted yield curve. I know some people say it's inverting. They're looking like the 30-year versus the 16-year or something. I mean, there's people in the media out there looking for anything that's inverted. So I was talking to someone, I mean, what does it mean that the 30 and the 15 are inverted, 30 and 10? I mean, and we were talking 10 years versus the 20 years after that. You're forecasting interest rates from year 11 through 20, and you think that's telling you, I don't know what that tells us. But the 10 versus the 1 tells you a lot. And then the change in the 10-year, the standard deviation there, as I said, real simple, 6.5 basis points. So a few days ago, we saw the 10-year drop 11 basis points. That was a big day. If you're interviewing that day and you walk in there and they say, what did you think about the markets today? You say, yeah, Treasuries really sold off. What are they going to think? You're in trouble, right? Because what did Treasuries do? They rallied, right? Interest rates fall, Treasuries are rallying. So you want to know those things when you go in. So keep that in mind. The 10 minus the 1 should be about 100 basis points normally. Right now, it's really close to that. And if interest rates have changed, how much did the 10-year change? 6.5. It's a pretty decent big day. What about the S&P 500? Standard deviation daily there is 1.2%, or if you leave out the Great Depression, all that, about right around 1%. So again, a 1% day for the S&P is a pretty big day. What did it do today? Close to 2, right? So today was a pretty big day, and it was 2 just a few days ago. So we've gotten 2% days out of 3. That's pretty rare as well. The max, probably curious, when did the stock market go up 16% in one day? That would be curious. Y'all know when this one is. When did the S&P fall 20% in a day? What year was that? 1987. Y'all remember? Yeah, you don't remember, but 1987, Black Monday. The 95th. So see how skewed it is. There's a max and a min. The 95th is 165. So that means 95% of the time, the S&P doesn't rise more than 1.65%. So if you see a 2% up day, that's a 5% event. On the downside, pretty symmetrical at the 95th, 168. So today was a pretty rare event. You don't see that more than maybe, every few weeks or so. Pretty rare event. The VIX, someone was asking about the VIX. The average volatility index is 19.5%. So pretty close to 20. Where are we today? Pretty elevated, right? 28's a pretty high numbers. So people are pretty freaked out. And that's coming from some pretty low numbers just back in December. So we're below average risk back in December. Now we're way above average risk. The 95th is 33. So that 28 is a pretty high number. The market's saying they're pretty freaked out right now. Do you buy when the market's freaked out? So Anthony just showed you how does the market do after a 10% sell-off. How does the market do when the VIX is elevated versus that'd be a good study to do, right? How does the market do 1 year after a VIX above 25? How does it do 1 year later after a VIX at 15? What about 5 years later? What does Warren Buffett say? If everybody's running for the exits, that's when you want to run in and buy. If everybody's running in the buy, you sell and let them have it on the way out. So we're not quite there at the freak out level. We were back in 2020. That was pretty freaky, wasn't it? Anybody see any numbers that stand out back in 2020? Is 82 an elevated VIX? That's a pretty elevated number, right? The market was like, we have no earthly idea how this is going to all play out. This is pretty radical. So you see an 82 VIX and you're going into an interview, something's going on. They're probably not going to be listening to you because they're probably freaking out themselves. The 5th is 11. So, I'm a big option buyer anytime I see the VIX fall below 10. It's like insurance is on sale. And two things I like about a VIX below 10. First of all, insurance is really cheap. And second of all, I think everything's really risky because a VIX below 10 means people are real complacent. They're not worried about anything. So to me, it's like when you see the VIX below 10, it's like there's a fire outside your house and you call your insurance company and say, hey, I need insurance. Hey, we're having a sale. If your house burns down, well, we rebuild 2 houses. It's like, wait, but there's a fire. Yeah, we're not worried about that. We'll give you 2 houses if your house burns down. I would buy that insurance. That sounds like a pretty good deal. That's essentially what the market says. When do we get down to 10? It's been a while to be that low, but it wasn't that uncommon during the, from the 2008 through the 2019. We saw some pretty low numbers. You've seen some low numbers here, aren't you? Getting in there. Yeah, so there were times during that whole run after the 2008 crisis where markets got very, very safe. They just like, we're not worried about anything whatsoever. And then the last one, I got to watch the time. We're doing good. Y'all give me a lot more time than previous groups did. And then the last one I like to do pardon me. Let me get. This is hard to do when you're holding a microphone in your hand. The last one I'll give you, which I think is interesting after you saw what Anthony just showed you. Anybody want to guess what RLG to RLV is? Any guesses there? The G stands for growth. The V stands for value. Okay, so here what I'm saying, growth stocks. What did Anthony show you? Growth stocks have sold off quite a bit. The typical premium of growth stocks over value stocks is about 46%. Where are we today? 89%. So growth stocks are what? Relatively cheap or relatively expensive? Pretty expensive, but where were they back a few days ago, couple months ago? Really expensive. They were double the valuations of value stocks.
What happened when it jumped from the 47 to the 85?
Oh, these are months, they're not days.
Okay.
So it's a much shorter period of time. Right, what about RAG versus RAV? This was large cap. This is all cap. Large, medium, and small cap, all right? So when you put small cap in there, the premium's about the same long-term, still expensive. So it almost doesn't matter if you're looking at large cap or small cap. Growth stocks are still, even with the sell-off, I don't remember, Anthony, I think you were showing like 15% or something drop in growth stocks. Even with the sell-off in Facebook and all these other growth stocks are still very, very expensive. And then the last one, small cap to large cap. There should be a premium there, right? Small companies grow faster. They should be more expensive relatively. What's the average premium? About 25%. Where are they today? You can actually buy small cap at a discount today. They're actually cheaper than large cap. I am buying small cap, by the way, and I'm buying small cap value. We'll see how that plays. It looked pretty good on Anthony's chart, so we'll see if it keeps playing out. There's the max. You can probably guess what, 2000, 1999, 2000 is probably when those got really expensive. There's the min. There has been a time, which is pretty amazing. I don't even know how that even makes any sense. There was a time when growth stocks were cheaper than value stocks. That seems to be impossible because just the definition of growth stocks should mean they're more expensive than value. So I'm not sure exactly how Bloomberg is calculating that. There's a 95th. So we were at a really elevated level just a couple months ago. There's the 5th. We won't get there anytime. Although small cap, what do you know about small cap? This is about as cheap as they get. This is a really cheap area for small cap. Now, if we go into a recession, you don't want to be in small cap. But if we can avoid the recession, small cap might be a pretty decent place to be right now. But I'll try to think of others, but you should have some of this stuff kind of typed out in your wallet just so you know. So when you walk in, you're going into an interview and they ask you about markets. You say, man, growth stocks are sold off, but boy, they're still expensive versus the historical. That's a pretty astute thing for students to say, or you know what, I've been thinking about small cap now. Man, they're trading at a really, really big discount. They usually trade at a premium 25%. Right now, I can get them at a discount of 25. That's the kind of thing they're looking. They may strongly disagree with you, but that's not what they're asking to interview. They just want to know if you're thinking. And these are the kind of insights college students don't usually give because most college students, amazingly, finance majors don't follow markets. And so you want to be the one who's following markets and you can talk. So don't have to do all of these, but pick something that gives an insight that a typical undergraduate student wouldn't have. And so these are a few of them. If any of y'all want this spreadsheet, just let me know. I'll send it over to you. Just email me and you can just look through them. It's not really well labeled, but y'all can figure these out right from the way I did it. So, all right, that's it for me.
Thank you, Professor Sweet. Okay, on to the next item of our agenda real quick. We do have a social event already in the making. Have y'all ever played Scribble.io? Can y'all raise your hand or show me something? Okay, a few people. I've never actually played myself, but I have seen it play on YouTube. So I put a little slide there on how to play it, but we do want to have this virtual social event first to see if y'all are comfortable, showing up virtually or in person. And of course, y'all are in person, but for those on Zoom, right? So the date is still to be announced, but it will be in the upcoming week or so, not too late. So stay tuned on our social media and on Telegram, Discord. There's no professional art skills needed to join us. So it is a drawing game, right? I believe you kind of just have a certain amount of time to sketch and people try to guess what you're drawing exactly. So we'll see how that goes, but it sounds like a lot of fun. This will be available to everybody to join through our Discord. So y'all have to hop on that if you do want to join this social event. So news to come on that. Stay tuned. And once again, before we close off for tonight, here's our schedule for the sectors and classes. I do suggest you join, even if you're scared, right? This goes back to my quote of the day or the week for this meeting. Take the risk. You need to be knowledgeable and stuff for you not to be afraid of doing certain stuff. So here's that. If you want to take another photo of it, if y'all don't already have it, but it is posted on our Telegram and Discord and Instagram, I believe too. And next for the agenda, join our platforms, y'all. That's how you stay up to date with everything we have going on. Classes to join. Now they are QR codes. Might look overwhelming, but they're color coded and everything separated. Hopefully that helps. And Jake did touch up on this when he was presenting, but we are building an alumni database. And I think this will be helpful for everybody, even if you're a freshman or senior, whatnot, looking for a job, trying to see what you really want to be employed in, like what you want to do after graduation, such as myself. You can kind of hop on the database and see titles of where these certain individuals work at. And if it sounds interesting, hit them up for a call, email, chat, anything really works. And that's about it for today.